Welcome traders to this video where we're going to be looking at an evaluation account and what we can learn from a terminated evaluation account. So we've seen many traders come through now and actually take on the evaluation account. The evaluation account is essentially a trading challenge where as mentioned before, traders can come in and they can actually get started for a relatively low fee, much smaller fee than the instant funding packages, and they can prove themselves on a evaluation account and then get actually live funded from us. So we do give a lot of room for the trader in terms of the evaluation account, leverage, etc. We like to see, what the trader can do. We've seen many traders just go straight to the drawdown, not having full grasp of their strategy or understanding the trading market, or perhaps they've actually gone into a small amount of drawdown and then gone all the way back up into above the starting balance and then towards targets, etc. So we'll have a look at this account here and see what we can actually take away from the evaluation, and I can provide some pointers for those on the evaluation account as well. So this is a £10,000 evaluation account. So the trader did in fact start in a small drawdown and took it back up to above the starting balance briefly, and then did in fact go into drawdown quite rapidly, and then kind of sideways movement for a small period of roughly a week or so before the trader did in fact reach the drawdown limit. So on this account, obviously for all the evaluation accounts, it's 10% gain target, so £1,000 profit target to the milestone, and the equity stop out on the evaluation equity stop out is minus 500 or minus 5%, which this trader did in fact unfortunately achieve. So if we have a look at some of the advanced statistics now, we can actually see that there was a fair amount of trades placed on the account, which is good to see, a large volume. That's what I always try and influence our traders to do, is go for more of a skill approach to trading, especially when it comes to trading and managing prop accounts. It's all about the volume over small amounts of trades and go for luck. So essentially this trader did actually have winning trades 85%, losing trades 14%. So let's have a look at where it went wrong. Short positions 111, long positions 216. This trader did favour going long with a profit factor of 0.64, which is not a very good profit factor at all. Obviously you want to see that at least above the 1. Best profit £44.25, and then here we can see biggest loss minus £158.43. So the biggest loss was actually over 3 times the biggest win. That brings the average profit to £3.26 and the average loss at just over £28.74 with a minus expectancy. So this trader did in fact not have quite grasp of the risk management. If we have a look at what they traded, they did trade many symbols, including gold, gold being the main one really. And if we look through some of the trades, we can actually see some of the trades here, the recent trades on the account before it did in fact reach the equity stop out limit. So yeah, like obviously what we've said before many times over is you want to try and find a select few instruments that you can grasp and understand fully, so that you can actually move forward with some kind of strategy and ongoing kind of recognition of how that instrument moves and how you can actually take advantage of it in the future. Depending on certain situations, if you did go long, for example, and it did fall and hit stop loss, it did hit stop loss, then you can document that and learn from any sort of trades or what influenced that to actually hit your stop out, and then you can learn from that and then try and capitalize on those lessons in the future on those instruments. In terms of advanced statistics, obviously there's many trades on this account, but in fact this trader did in fact have a quite a big losing. Well, the actual risk on the trades was relatively big, considering that the trader didn't let any of the trades run into profit. So on the evaluation accounts, we do provide a leverage of 1 to 100, which gives the trader more room to basically trade exactly however they want. You can go quite high risk with this leverage, and obviously it can lead to either a quick drawdown or a much quicker win if the trader doesn't manage their risk or actually control their trades well, or with any kind of profitable strategy. So we give this sort of room to the trader to control, but obviously the trader still needs to understand the risks, the leverage, and the stop out of what they have to work with. Obviously, if your trade does go into drawdown, then you do really need to scale that in and actually go even smaller with your losses, smaller with the lot sizes. So let's say 5% maximum drawdown. Let's say you lose 1%, you've got 4% left. Then scale it all down a notch, to go down 20% on your lot sizes. Really control the amount of risk small, so that you not a small amount of pips, but a small amount of actual percentage on the account, so that you can let the trade still run, but also you're actually controlling the risk. So it's bringing the risk all the way down, so you can actually try and build upon a few more winning trades. Let's say the next 10 trades, you get, let's say, 6 of them right, and then you chunk up a little bit more in terms of equity. You can then actually earn the right to trade slightly bigger. So that's what we want to be doing. We want to try and lay the foundations where, as we will never, the good traders that actually trade for us, they'll actually never lose their prop account, because they're never putting themselves in a position where they actually effectively blow their account. It's all about managing the risk so that you can actually scale it down when you're in a losing streak, when you're experiencing a downswing or drawdown, and then scale it up when you're actually winning, and you try and go a little bit more aggressive, attack those winning trades when you have enough buffer in your account to do so. But in terms of overall trading strategy and how you should actually manage and what you get in terms of your prop account, it's very similar to the live funding. It's just, it's this kind of two-step verification phase where you just need to understand and develop your sort of strategy with how you use our prop firm, because when you do start trading live, the dashboard's going to be the same, the account's going to be the same, the the instruments, all of the trade conditions are all going to be the same. You just need to obviously adapt to, when you go to a live account, of the account size and how you're actually going to be managing that account, taking it through the trading levels. If you do decide to use or take upon an evaluation account, then make sure you do use your dashboard as you trade on the account. Whether that's you're looking at it every couple of days or every week, you want to be tuning in to actually have a overview of your performance, look at the progression, look at where you are in terms of getting target, the equity stop out, and how many days left, the expiration, the trade count. And then you can actually look to actually take lessons away from your trades, what you did right, what you did wrong, and then how to improve. Because there's a lot of advanced statistics in here, and a lot that you can actually take away from the account in terms of looking at how to improve, and what's actually happening. Because when you do actually start trading live, you're going to be using your dashboard heavily in terms of profit withdrawals, your win rate, actually getting to the next trading level, getting to trade more capital long term, and actually how you actually scale through the funding levels, and your overall trading performance, essentially. So it all comes down to how well you manage and control the risk of the drawdown, because essentially we don't have many rules. On the evaluation, we do have obviously the equity stop out, so you do need to be you need to control your stop out and the equity and the live trades in a way that actually maintains profitable performance. Use stop losses, use take profits, and keep the risk low on all of your trades, so that you can try and build upon a winning formula, and then build upon that, get to that 10% profit target, and then get to phase 2, and then finally onto the live account. So that's it for this video. Just a quick summary of how to progress with a evaluation account. Hope you took something away from that, and trade safe.